evening to all. Myself Vaibhav. In today's session of Market Movers, we will be taking a look on the dollar index, which is in retreat as risk-on sentiments are taking hold across the broader financial markets. Wherever you look, if you look at the equity segment of the market or the commodity segment or even the currency segment, all are in risk-on tones, and here, as a result of that, we are seeing that dollar index is on the back foot, and most of the other major currencies are heading higher in respect of the dollar. Now, if we consider the trading context for the day, this all is coming from the rally, the substantial up move, almost more than 5 percentage point, which we saw in the Shanghai Composite earlier in the day. And there is a new breakout on the yearly charts, and as a result of that, a new bull market is taking shape, and these tones are also now visible across the world, and most of the major equity indices are heading higher. Even if we consider the equity indices in Euro area, Europe all are higher by almost around 2 percentage point, and also the US equity futures are also trading with the gains of more than 1 percentage point. If you consider the data which we have got so far, earlier in the European trading session, we got the retail sales numbers, and here there is a sharp rebound. And if you consider month on month figures, the rise in the month of May is of 17.8%, which is a record rise. And this is coming on back of the equally sharp fall which we saw in the month of April when the lockdown restrictions were in place, and in the month of May, to some extent, these restrictions were loosened, and as a result of that, the economic activity picked up, and that same is being reflected in these month-on-month numbers. But the economic activity is still lower compared to the same time of last year. So year on year, we still have a decline of 5.1%, but this is of course a lot better compared to the decline of 19.6% which we experienced in the month of April. Later in the day, we are also scheduled to get the ISM's non-manufacturing PMI data, and here also we are expecting a rebound. Though rebound is not likely to be that sharp, we are still in the contraction territory when it comes to the PMI data. We have the manufacturing PMI as well, and not today. Earlier we have seen those numbers, and even the manufacturing sector is in contraction only, and here the non-manufacturing data which we are going to get today is likely to show some improvement, and we are expecting the figures in the vicinity of 50. It will be shade lower than 50, but it is going to almost get there, and maybe in next month we will see the PMI finally entering into expansion phase, which is reading above 50. And most of the components, if we were to look individually at them, then also I think most of the components, the new orders, prices, employment, and also the business activity, most of these subcomponents are also picking up. So we can expect better days, better times ahead. Now moving on to the technical segment, we will cover the dollar index at first, and then we will move on to the Euro USD. Let's start with the dollar index technical outlook. This is the daily time frame chart, and after consolidation close to the 61.8% Fibonacci expansion zone of its prior fall from levels close to 104 to shade lower than 99, and then this consolidation happened, and you can now kind of clearly see double top kind of formation in this consolidation phase, and here we are pretty much seems likely that we will see next move towards this 100% Fibonacci expansion, from where at the earlier occasion we saw rebound happen, and now it seems pretty likely that we are going to levels close to 95 if not lower. So for the time being, we are trading with the assumption that this weakness is likely to persist for at least a week or two, and the next few trading sessions we will be trying to look at the possibility where we can indeed profit from these bearish sentiments which are prevalent in the dollar index. And here in today's session we have a fresh break on the downside, and I think from the lower time frame chart we can figure out where to enter and where to exit just to optimize our risk reward ratio. If you consider the 4 hourly chart, then here we have these pivot point series central point coming into play around 97, and in today's session we have this break on the downside. Earlier last week we had this close below that, and those break on the downside is now exerting fresh pressure on the price action of the dollar index. And I think unless and until we have a fresh break above this central pivot point zone, we can continue to bet on the further fall in the dollar index. And for that, if it is going to come true, then we have to see if we can go for a fresh entry here in the dollar index. And I think that's kind of good choice if we are going to go for a short sell. But considering the fact that there has been already substantial fall, maybe we might have to figure out some better levels. At the moment it doesn't look like that it will bring us decent risk reward ratio if we go in for a fresh trade straight away. And another factor is that this regression curve is still bent on the upside, but now the price action has shifted to the this lower band of this regression curve. So you can expect that in coming day or two it will flatten to some extent, and then maybe by the latter part of this week we will see it bending on the downside. But for the time being, it is still bent on the upside. So I think that might also play a role in the dollar index spending more time consolidating rather than going all downhill toward this first support of this month's pivot point series straight away. So we have to plan accordingly. Of course, in market anything can happen, and this if we consider there's a channel formation which is of lower highs and lower lows, then it is still pointing downward. And of course, as I said, the levels close to 96 can be considered as our immediate target. And I think for any fresh entry on the short sale side, if we are fortunate enough to get any fresh entry closer to this upper band of this downward sloping price channel, then I think that would be a fantastic opportunity. But you never know if it is going to come to pass or not, so we will have to watch out for that. We also have this confluence zone of this 50, 100 and 200 SMAs, and so here we have these 3 SMA confluence, and it is also likely to act as a strong resistance. So all in all, we have these multiple factors which are likely to cast a resistance resistance zone here around 97 zone, and we have already seen on the 4 hourly chart we also have the central pivot point around the same area. So all in all, as I said, we have strong resistance in place, and so unless and until we see a fresh swing high being made above this immediate swing high which is there around 97.35, we can be pretty much optimistic about its proposition on the lower side. And any entry point closer to this 97 zone, 97 to 97.20 would be an welcome move, welcome opportunity for us to get involved. And as I said, a stop loss of 97.4 should work well enough for us to stay on the safer side. Now moving on to the Euro USD, here also we are betting on the weakness which we are seeing in the US dollar. So consequently, as you can guess, we are betting on the Euro to rise against USD, and for that also we need some good opportunity here for getting a fresh trade. Last week we had considered the buying in Euro USD, and if any of you had gone in for that trade, I think you might be making decent amount of money. We had considered this opportunity in the session titled Euro USD finds support closer to 1.12, And now here we are looking at the Euro USD trading above 1.131. So that's a big move from those levels. But still, even now, I think if any trade which needs to be taken, it needs to be taken on the long side. And for that, we have to figure out fresh opportunities, fresh levels, which can be profitable for us. So if we are going to look at this 4 hourly chart, here also the regression curve is still to bend on the upside. We had this consolidation phase where the gains were getting kind of incremental, and the momentum had shifted to the sideways manner. So because of that, we saw this regression curve actually bending on the downside, but the losses were not really sharp. And then after due consolidation, the Euro USD is indeed picking up, and now it is holding well above this central pivot point of this month's pivot point series, which is also likely to act as a strong support zone in the immediate future. So here, as you can see, we have this support zone around this central pivot point, which is there around 1.125. So I think as long as the price action is above that, we can continue to look for any buying opportunity with the possible targets coming in around 1.14 for coming days, coming weeks. And if that is going to be the case, then of course we have to see on the hourly chart what can be considered as our entry point. And now we have this fresh break above the immediate swing high. So you can say we have confirmation of this formation of higher highs and higher lows, as we have these lows higher than these prior swing lows, and also now this fresh swing high is also higher than this prior swing high. So you can say channel is also forming, but getting involved on the long side straight away, as I said, is a risky proposition. Of course, earlier last week we had this opportunity to get involved anywhere close to this 1.124, 1.125 range, and we had also considered that last week. But now, again, I think we will need to allow Euro USD to cool off to some extent, and maybe as and when the price action will be approaching the 50 SMA, or maybe the 50 SMA will start approaching the price action. Either way, we will have to wait for that, and as and when we will see some consolidation closer to 50 SMA zone without the price action breaking on the lower side, then I think we can think about getting involved for a fresh trade on the long side. And as I said, the target can be worked out closer to 1.14 with the stop loss coming in just little below this 200 SMA, which is there around 1.124. So straight away, not many trading opportunity as per my setup in the Euro USD, but maybe if we get fortunate enough and also lucky enough to see some correction and then do consolidation, then of course the opportunities will arise for us to get a good amount of profit if things go well. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while utilizing the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.